YouTube hates us. Are we live yet?
Are we still not live?
It says we're live.
YouTube hates us. Are we live yet? It says we're live.
Are we live? Can you guys hear me? Can you hear my voice? Oh, this is exciting.
Training examples.
Oh, there we go.
It's like 10 million training examples. It's like.
Can you hear my voice? Oh, this is exciting.
Examples.
Oh, there we go.
There's no substitute.
It's like 10 million training examples. It's just
like
like
Tesla
becomes
has
incredible.
more vehicles
So
on the road.
there's just no substitute for massive amount of data.
For companies
And also Tesla has more
maybe even over
vehicles
magnitude.
on the road
So I think we might have
that
90%
collect this data than all other companies combined.
a very big number.
Maybe even more of magnitude. So I think we might have 90%
Success in AI endeavors is a
a
function of
very
talent.
big number.
You
The
data
success in AI endeavors is just a function of talent.
and we have outstanding
Sort of unique data and computer resources. And we
and I really don't know how you
have outstanding
do what we're doing. That's my software. I have a computer that they did not have the thing. So
and I really don't know how anyone
speaking of which, those particular training
software
is designed to reduce the cost of neural net training.
So
It is designed to reduce it's so optimized for the kind of reading, which is a good thing. So
it's designed to
we just see
optimize
the need for
which is
neural net training towards being a quasi
so,
of things is just
we just see
enormous.
the need for
So
neural net training.
we expect you to put video and social to be clear. But there's we just see a demand for really vast training resources. And we think we may reach in-house neural net training capability of 100 exaflops by the end of next year. So to date, over 300 million miles have been driven using FSD beta. That 300 million mile number is going to seem very small very quickly. It'll soon be billions of miles, then tens of billions of miles. FSD will go from being as good as a human to then being vastly better than it.
Elon's just rambling right now, so none of this matters too much. As far as the stock and what that does over the next couple of days, we really just want to hear the guidance and some of the forward-looking statements. That's going to be important.
A human, we see a clear path to full self-driving being 10 times safer than the average human driver. So, and between autopilot, Dojo computer, our inference hardware in the car, which we call sort of hardware 3, 4, but it's really dedicated. It's a high efficiency inference computer that's in the car, and our Optimus robot. Tesla is clearly at the cutting edge of AI development. With regard to our Cybertruck, we continue to build release candidates of the Cybertruck on our final production line in Austin. I'm actually here in Austin at the Giga factory. This is the first truck that we're aware of that will have 4 doors over a 6-foot bed and will fit into a 20-foot garage. So it's sort of biggish on the outside, but it's even bigger on the inside. So I think that's one of the elements of good design is it should feel bigger on the inside than it looks on the outside. And this is no small car, but we really cared about the exterior dimensions of the Cybertruck down to the last millimeter. So it's just we try to get right in the middle of the Goldilocks zone, not too big, not too small, and then really maximize the utility of the volume. And we can't wait to start delivering it later this year. Some other highlights: our global supercharging network now stands at over 50,000, roughly 50,000 connectors and over 5,000 locations. As I think a lot of people are aware, the Tesla the Tesla charging standard, which we made open source, and is now called the North American Charging Standard. We're deeply honored that Ford, GM, Mercedes, and many other OEMs have signed up to use our connector and gain access to our charging network. We strongly believe in helping other car companies to accelerate the EV revolution.
How do they monetize it? That's what we want to hear.
In general. So that's our goal there. Something I think I want to emphasize, very, very strongly. This is a very important point. Is that Tesla, just as with the North American Charging Standard, although we're not licensing, in that case, we're not licensing it, we're just making it available. but we are very open to licensing our full self-driving software and hardware to other car companies.
This is what we want to hear.
We are already in discussions with early discussions with a major OEM about using the Tesla FSD.
Okay.
So, we're not trying to keep this to ourselves. We're more than happy to license it to others. And lastly, our new lithium refinery and cathode facility are progressing well. Then in conclusion, we continue to focus on making as many cars as we can while maintaining healthy financials. Our artificial intelligence development is obviously entering a new era, and we're incredibly excited about what's to come. Our other businesses, such as Megapack, supercharging, service, and whatnot, all started to become a meaningful contributor to overall profitability this quarter. Then lastly, I'd just like to profusely thank all of our employees who are making a lot of extra effort during uncertain times. Thank you very much for your hard work and the impact you're making.
Thank you very much, Elon. And I think Zach has some opening remarks as well.
Want to hear from the CFO.
Yeah, thanks, Martin. As Elon mentioned, Q2 was another record quarter of production and deliveries, as well as records in profit for our energy and services and other businesses. Congratulations again to the Tesla team on the continued progress. As we navigate through a period of economic uncertainty, rising interest rates, volatility in consumer confidence, and regulatory change, I want to comment on our financial approach. First, the single most important priority is to ensure we are continuing to invest heavily in the core technologies that will drive the long-term value of the business. This includes increasing spending on AI-related technologies such as full self-driving, Optimus, and Dojo, as well as new products such as Cybertruck, our next-generation platform, and the Semi, as evidenced by the continued growth in our R&D spend. This also includes continuing our investments in capacity expansion, not only in our vehicle factories, but also our supercharging network, service, internal applications, and battery processes, as we continue with meaningful capital expenditures to lay this foundation for the future. Second, we continue to work towards our goals of maximizing volumes on both our vehicle and energy business, but most importantly, doing so in a way that generates the capital to continue our pace of R&D and capital investments. This requires a strong focus on per unit COGS reductions in each of our key businesses, as well as working capital improvements on raw materials, work in process inventory, and customer AR, all of which progressed appropriately in Q2. If we look specifically at our automotive business, our gross margin showed a modest reduction and remained healthy, despite action taken to further improve vehicle affordability early in the quarter. We realized per unit cost improvements in nearly every category, including material cost and commodities, manufacturing costs, and logistics,
something I've
while
talked
also
about quite a
continuing
bit.
to rapidly increase the build rate in our Austin and Berlin factories. For our energy business, we improved margins and gross profit, driven by cost reductions and deal economics, particularly with Megapack. As a reminder, storage volumes are typically volatile sequentially based on the types of projects and their specific revenue recognition milestones. As we look forward to the rest of the year, I want to reiterate Elon's comments on Q3 volumes, driven by planned downtimes for factory upgrades. These upgrades will also carry some amount of factory idle cost, however, we are working to minimize as much as possible. It's also important to keep in mind the uncertainty in the macro environment, which can impact our execution positively or negatively in the near term. Regardless, we continue to remain dynamic with a focus on fundamental efficiency and a long-term outlook.
Pump it.
Congratulations again to everybody on a great quarter.
Thank you very much, Zach. And let's go to investor questions. The first question on
Guidance.
licensing FSD we've already answered, so let's go to the second one. The second
They're not
question
gonna give it
is,
to
what
us.
is the status of 4680 cells? How far are you from the specs you laid out on Battery Day? When do you expect to achieve what you laid out on Battery Day?
Yeah, first I'll just start with a little bit of a production update. So in Texas, 4680 cell production increased 80% Q2 over Q1, and the team surpassed 10 million production cells produced here in Texas, so congrats to the team for that. Their focus on yield reduced our scrap bill by 40% quarter over quarter, and that resulted in a 25% reduction in cell COGS. Here in Texas,
That's pretty big. Your 4860
10% higher energy
is your
density than
semi
current
and your
production.
Cybertruck
That
battery
was accomplished
cells.
through process and mechanical design optimization. As we scale Cyber cell production through the end of the year and early next, we should be in a comfortable place on cost per cell. Against our battery energy density targets, the Cyber
Tesla's
cell is
fighting
at our
right
expectations on a like-for-like electrochemistry basis. We're yet to integrate silicon or in-house cathode production, both reviewed on Battery Day, which do bring
350
significant
tonight,
further
baby.
energy density and cost improvements.
I
But
can
that
get
is a
behind
topic
that.
for another day. Lastly, it is important to remember that most of what we
I don't
focused
think
on
we've
at Battery
really
Day
heard
was the
guidance,
Tesla
though,
engineered
is the problem.
4680
That's why the
production
stock doesn't
system
know what it
and the
wants to
improvements
do.
we strove to achieve on equipment,
The call's
factory
usually an
density,
hour,
capital cost, and utility
but
cost
sometimes they
reduction,
cut it
all
short.
of which we are realizing in our Texas scale up to date.
Thank you very much. The next question is, can you talk more to the upcoming Tesla energy products and how your thinking has evolved on the revenue model? Given Tesla's AI capabilities, how do you see the long-term mix between hardware
AI.
margin and recurring software margin from AutoBidder as this segment accelerates?
We can't comment on future product roadmap, but I can provide a quick energy Q2 update. Megapack continues to show strong
Give me a
demand
break.
globally, with Lathrop ramping successfully to meet our contracted projects in 2023. As stated last quarter, Megapack margins are in a reasonable place in line with our target market, vehicle target margins. The second final assembly line at Lathrop is progressing on schedule, eventually doubling Lathrop capacity ahead of our full factory ramp in 2024. We have several exciting large projects in construction or nearing completion, including the KES project in Hawaii, the Riverina project in Australia, several projects in California, and one here at Gigafactory Texas that I toured today, actually. We want to thank our customers, utilities, and grid operators for trusting us with these projects. On the AutoBidder question, we continue to grow AutoBidder contracts in wholesale markets like Australia, Texas, UK, and California with over 6 gigawatt hours under Tesla's dispatch next year. In the UK, our projects performed best in the industry in Q2. AutoBidder does have software margins and is an enabler for hardware sales, but it's a relatively small contributor to revenues given how much deployment growth on the hardware side is occurring.
We need to
It's important
hear
remember
something
that
about
these large projects, these large capital projects have lifetimes of 20 years, so recurring revenues on an
guidance.
annualized basis relative to upfront capex are
do
small.
they expect price cuts?
On the residential
things of that
side,
nature?
we have some fun things happening. We recently surpassed 500,000 Powerwalls installed. Just this week, we were launching Charge on Solar, which allows Tesla Powerwall and vehicle customers to charge their vehicles using their excess solar and drive only on the sunshine that hits their roof. Yesterday, we began paying customers in Texas for participating in our virtual power plant to provide grid support to ERCOT. We expect these credits to lower our median customers' annual bill by a third and to increase these credits over time as ERCOT expands market access. And today, we are expanding Tesla Electric enrollment to new Model 3 owners in Texas, followed by all Texas vehicle customers over the rest of the quarter. Unfortunately, and somewhat similar to Tesla Insurance,
They probably
bringing
are saving the
Tesla
best for
Electric
the
and
last.
VPP
too, so
capabilities to our customers
keep that in mind.
requires working through a fractured regulatory environment on a jurisdiction by jurisdiction basis.
This is a really
In
good
the long
move so
run,
far,
the value
though.
of residential energy software
Most of
and
your
hardware will be driven
most of
by
your
the level of
bearish
market access
individuals
that utilities,
expected Tesla
market
to
operators,
fall
and
like a
regulators
rock. And
permit.
a lot of hedge funds,
For Powerwall
institutions,
eligible
money
to provide the
managers,
full
they
stack of
don't
energy
make moves in
services,
after hours
like
unless
peak
things are
capacity and
really
system buffering,
bad
such as in
or
Australia, we
just
can more than
like a
double the value
NVIDIA
of
raises
ownership relative
guidance
to a typical system today.
50%, you know. So this is
Thank you very much. The
actually
next
more
question is,
positive
could
than
you
not
quantify
that
the
we're not
benefits
down.
to COGS per unit from the IRA battery manufacturing incentives, and secondly, battery raw material declines year to date?
But they will get into some form of forward guidance at some point. That will happen.
On the first part of the question for IRA manufacturing incentives, we provided previous guidance that we expect these to be for the course of this year in the range of 150 million to 250 million per quarter.
Nobody was really expecting the
boundary,
estimate, which was like 18.6 or 18.8 or whatever. Nobody was expecting that. You didn't hear that once. That's
includes a 50-50 sharing
was really just BS on the expectations
from
part.
our long-term battery partner, Panasonic.
Even your bullish analysts were expecting
on the commodity side,
17.5%. This was a huge win as far as margins and the real expectations. Your bears thought 15 to 16%.
I think I commented on this on the last call, because typically we see this coming about a quarter before it actually is realized in our financials. And also, just as a reminder, we're not fully exposed to the price of lithium.
That's why this happened
our supply chain
initially.
team has done a terrific job in partnership with
then we're just trying to figure out what things are going to look like, more or less.
Some long-term agreements here, but we do have some exposure that moves up and down. We're also seeing benefits in aluminum and steel, which I think is great. Not as large as the lithium impacts, but they contribute nonetheless. So if we add up the total impact of this in Q2 relative to prior quarter, it's about the same size and magnitude as the IRA benefits that we also received. Just to put this in context, as you look at COGS per unit sequentially from Q1 to Q2, I think there's two things to keep in mind there. The first is that our SX mix for deliveries increased quite a bit from Q1 to Q2. So as you think about fundamental cost reductions, it's important to adjust for that. And then secondly, as we continue to work on reducing our Austin and Berlin costs, which we did quite a bit of that from Q1 to Q2, these factories are still slightly above Model Y production costs elsewhere. And in the quarter, our mix of Austin and Berlin related builds increased. And so that's something to consider as you model out the impact from Q1 to Q2 in terms of COGS per unit. I do want to ask Karin if there's anything else on the commodity side or just more generally you want to add here.
Yeah, as you mentioned, Zach, we've naturally been a little bit hedged from the lithium position because of the long-term contracts we have in place. But we have seen reduction in pricing across the board for all commodities that specifically go into batteries, such as nickel, cobalt, and graphite. And the reductions in pricing translate into thousands of dollars when you look at it from a per vehicle impact. We're taking advantage to extend some of those fixed price contracts through the end of the decade. So it's a playbook that we'll continue to kind of go back to as we look to the future.
Thank you. The next question on FSD. Have you considered allowing FSD transferability as a lever to allow existing customers to upgrade to a new Tesla instead of being locked into an existing car due to the price of FSD?
That's a good one.
Yeah, this is a question we get asked a lot. So we're excited to announce that for Q3, we will be allowing transfer of FSD. This is a one-time amnesty. So it needs to be you need to take advantage of it in Q3, but or at least place the order in Q3 within reasonable delivery timeframes. So
that's a different one.
Yeah, I hope this makes people happy.
So you can transfer your full self-driving from like a Model 3 to like an S or an X.
When will you give more information about the
just transfer
Cybertruck
it to a
orders,
new vehicle?
estimated delivery schedules, pricing, and specifications?
You'd think that would have had a better reaction.
It's so far off the hook you can't even see the hook.
We are coming down a little bit.
So that's really not an issue. I do want to emphasize that the Cybertruck has a lot of new technology in it, like a lot. It doesn't look like any other vehicle because
the prepayments on Cybertruck, 1.6 million.
And the production ramp will move as fast as the slowest and least likely element of
8 times the Ford F-150 Lightning
supply chain and internal production. So. I wouldn't expect it.
Yeah, you're right.
I hope it's smooth. We're certainly better at production ramps than
I still don't think this is
production ramps. But
this is the final move. This isn't anything.
First order approximation is there's like 10,000.
Tomorrow is going to be insanely volatile based off of this.
in the Cybertruck, and if any one of
I mean, the volume's pretty. It's
lucky,
decent, I guess.
least well executed.
Not compared to anything we normally see though in regular trading, like 20 to 40,000 per minute.
I think we'll be making them in high volume next year, and we will be delivering the car this year.
Thank you. The next question is, critics of Giga Casting contended that process makes vehicles harder and more costly to repair, essentially pushing costs onto the customer. Could you share some details about the initial repair experience with Giga Cast vehicles?
That must be why everyone's copying us.
Oh.
Yeah, thank you. This is Lars. And Martin, that's like simply not true. There's a misconception that traditional bodies are easy to repair, but they're made of multiple materials and multiple joining methods. Spot welds and rivets have to be drilled out. Panels and structural adhesive have to be chiseled out. Dried adhesive has to be removed. Stampings cut, blah, blah, blah.
It's a crazy patchwork quilt.
Yeah, and so putting that back together means time and money. Using an example of replacing a rear cast rail on a Model Y, to do that versus like what we replaced it with in the Model 3, it's 10 times cheaper and 3 times faster to do it with the cast rail. My design team works with our collision repair team since we're closed loop on this with insurance, and we design specific parts that will make it easier and faster to repair. And we have an incentive to do that because we have our own insurance and our own body shops. We expect that we'll continue to do this, and collision repair will continue to become cheaper and faster over time. And we already make this available to all body shops through our
Hey, at least Tesla's doing better than Netflix.
Yeah, closing loop
down
on
6.5%.
Factoring that into design is a big deal.
It's crucial. I don't think anyone else can do it with that ecosystem that we have. So.
Yeah, and we are actually able to change the details of the casting
Carvana went
with inserts,
stupid.
and we actually do that all the time. So, because the inserts actually wear out and need to be replaced anyway, so we can actually make design changes to the inserts and tweak the castings.
Yeah, that's actually
but the casting, basically cast the rear body or front body is lighter, cheaper, better for noise, vibration, and harshness, much easier to manufacture, and it's better in every way. And that's why so many other car companies are copying us.
Yeah, if this was another company, easy 20% pump.
Well, they certainly put out a lot of press releases about it.
Yeah, everything was better than expectations. I don't really even care what this move is. Sure, it'd be better to see an up move, but you're only down 1.5%. There's absolutely no conviction in this move that you're seeing right now. So I think the real action is going to be tomorrow morning.
Yeah, I think we're around 5 or 6 spots. We're 10, I guess. Yeah, it depends on how many are working in what phase. But it's sort of
At open,
there's more.
I believe. I believe Tesla probably shoots up sharply. I mean, you were better than expectations across the board. People were preparing for negative free cash flow. Free cash flow is $400 million last quarter. That's up 200% this quarter. It's over $1 billion. Estimate was 2.18 billion, but that wasn't even a real estimate. Nobody expected that. That's why the stock didn't sell off. You know, the real estimates were not what hit the news wire.
So we've actually had to design our own actuators.
So I mean,
the motor, the power electronics,
I expect if you don't
controller, the
collapse
sensors,
here in after hours, then you probably rip at market
really,
open.
every one of them is custom.
Is what I would expect.
And then of course we'll be using the same inference hardware as the car. But we are in designing these actuators, designing them for volume production. So they're not just lighter, tighter, more capable than any other actuators that we're aware of that exist in the world. There's also actually manufacturable. So we should be able to make them in volume. The first Optimus that will have all of the Tesla designed actuators, sort of production candidate actuators, integrated and
yeah, the opening of full self-driving licensing to OEMs is a big deal.
So and then we'll start ramping up after that.
He said they're in discussions with
in terms of when
a legacy automaker.
Useful things. We'll first be trying this out in our own factories and just proving out its utility. But I think we'll be able to have it do something useful in our factories sometime next year. I would be, I'm pretty confident of that. So and it's going well. I should say another cool thing about Optimus is that there's just in the U.S. alone there are 2 million amputees, and I was just talking to the Neuralink team, and by combining a Neuralink implant and a robotic arm or leg for someone that has had their arm or leg or all arms and legs amputated, we believe we can give you basically a cyborg body that is incredibly capable. $6 million man in real life. But don't worry, cost $6 million. $60,000 man. This sounds impressive, but it'll actually, so that actually could be a really, I think would be incredible to, potentially help millions of people around the world, and give them, a robot arm or leg that is as good, maybe long term better than a biological one.
Okay.
Thank you.
Sign me up.
Next question is,
Make me a
how has the order intake trended relatively to
gosh.
production levels during Q2, and how has it trended in the quarter-to-date period? Conceptually, how does Tesla decide when is it appropriate to reduce prices or add other sales incentives to increase demand?
Yeah, I guess demand is roughly tracked production. So,
Tesla's doing pretty well here,
which is what we aim for.
What it could be.
We look at, something that we have.
This really means nothing until we open tomorrow, too, just so you guys know.
Is that we have real-time demand and real-time production. 7 days a week.
Guidance?
I get an email, auto-generated email that shows output from all factories and orders globally. So it's like a real-time finger on the pulse of Earth, basically. And we adjust course according to what the mood of the public is. Buying a new car is a big decision for the vast majority of people. So, anytime there's economic uncertainty, people generally pause on new car buying, at least to see what happens. And then obviously another challenge is the interest rate environment. As interest rates rise, the affordability of anything bought with debt decreases. So effectively increasing the price of the car. So when interest rates rise dramatically, we actually have to reduce the price of the car because the interest payments increase the price of the car. And this is at least up until recently, it was I believe the sharpest interest rate rise in history. So we had to do something about that.
So when rates go down, prices are going higher.
The global economy, I really appreciate it. If I could borrow that crystal ball. Yeah, exactly. DM me. It should be known on Twitter. One day it seems like the world economy is falling apart, and the next day everything's fine. I don't know what the hell's going on. To be totally frank, I wish I did. That's why I say I always on Twitter I posted just really advising because I care a lot about
325 tomorrow morning.
The small shareholders, especially ones that are stuck with us through thick and thin.
Dude, the guidance.
I love you guys.
Important.
And so
I'm not hearing anything yet.
We can't control these macro shocks, or the manic depressive nature of the stock
Something's
market.
coming.
So that's why I recommend against margin loans in times that are turbulent. If times are not that turbulent, actually a margin loan can be a smart move within reason. But we're in, I would call it turbulent times. I have very high confidence in the long-term value of Tesla. like I see it a really, see it.
He says buy it, don't trade it.
Well, maybe not.
If you do, use a little margin.
A 5x increase in the value of the company, maybe a 10x. And
10x.
But where things go along the way, the trials and tribulations,
that
and
is
the mood of the
$8
market,
trillion. So
one cannot
I wouldn't argue
and
with that.
So, I mean, the old adage of buy and hold is right.
He's basically telling you to buy
For
Tesla.
investment advice, I say, like, identify a company whose products you love. See if they, does it
How
seem
does
like
that
they'll
not
continue to
pump
make good
Tesla?
products or great
He
products?
just said it's gonna
Buy that stock.
It's gonna 10x, 5 to 10x. No pump at all.
You will win. The reason companies exist is to make goods and services.
Yeah, tomorrow's gonna be
Ideally, great
epic,
goods
bro.
and services.
Epic.
They don't exist for any other reason.
Screw this
They
after
shouldn't.
hours crap.
So that's why you should buy a stock of a company that makes great products and has a great future pipeline. It's common sense, actually.
Yeah, he says we're just all fucking
and
stupid.
then generally, if you see, if you provided you're confident about what that company's products or services are, when the market panics, buy, and when the market is, overly exuberant, you can sell. I'm not recommending you sell Tesla, but buy low, sell high. Warren Buffett actually, I think, has a saying. I'm paraphrasing him, but a publicly traded company is like it's like imagining living in your house and some crazy manic depressive guy comes and stands at outside your house and yells property prices at you. So it's a different price every day. But the house is still the same house. So this is a stock market. You credit that to Warren Buffett.
He is really talking about the
Let's go to
stock
the next
right
question. With the emphasis of price cuts to drive volume growth eating into automotive gross margin, can investors expect to see automotive gross margin stabilize or even rise due to efficiencies outpacing the cuts? And if so, when?
Right here. Said that's a big
Where's
one.
that crystal ball again?
Come on.
If I may, it's like, look, the short-term variances in gross margin and profitability really are minor relative to the long-term picture. Autonomy will make all of these numbers look silly. I'd recommend looking at ARK Invest. I think their analysis is very good. The best, and generally, FinTwit or like the finance, the smart finance people on Twitter follow their accounts. They're great.
What?
That's in my opinion where you'll get the best info. I strongly believe Tesla is an epic long-term investment. And don't sweat it when things go up and down. In fact, if the market panics, buy. If the market's a little too exuberant, sell at the time. But just generally, like I feel I'm confident. We will deliver over long term, but can't control short term. So, and the autonomy is really where it's at. I mean, Zach, what do you?
Oh, I fully agree with you. I think the only thing in the short term that matters is what I said in my opening remarks, which is, are we generating enough money to continue to invest? And, the portfolio of products and technologies that the technical teams are investing in right now, this is intense. It's intense in terms of investment. It's intense in terms of potential.
Yeah, you did reference
Frankly, I think it's ridiculous that we have positive free cash flow in a capital-intensive business while investing massive amounts of money in new technology.
He said, we're building
that is super
4
hard.
factories. How do we have positive cash flow?
Yeah, we actually make our shit. We don't,
And so,
others, but
Elon is feeling himself today.
Boarding school.
And so at least from my perspective, what matters is
He didn't give us any guidance though on margins throughout the rest of this year.
That means continuing to be hyper-focused on near-term cost reduction, because everything we do in near-term cost reduction provides capital to reinvest. Hyper-focused on working capital management, of which we've made quite a bit of progress there on the raw materials and WIP side of that. We've been very focused on accounts receivables as well to ensure that we can continue to reinvest the cash. This is what we're focused on.
Yeah.
And, so there's, a set of this that we control. We have a pipeline of cost reductions. We are getting tailwinds in the commodity space right now, as Karn mentioned. That's helpful. Okay. Variability around average selling prices, goes back to Elon's point. We don't control interest rates. We don't control macro consumer sentiment. But we have an obligation
Elon controlled everything
to ensure that we're matching supply and demand and keeping things balanced. And so this is how we're managing the next handful of quarters. Soon enough, these quarters will be behind us. They won't be part of the present value of future cash flows of the business. And so we want to make sure we keep that view and make sure that the long term of the business is exactly the way that we want it to be.
Yeah, Tesla said it's going to 10x, so buy the dip.
All right, thank you very much.
That's what I heard. That's all I've heard so far.
Analyst questions. The first question comes from Dan Levi from Barclays.
There's like no guidance though.
Dan, feel free to unmute yourself.
Great.
They just said commodities coming down are going to help. That's going to be a tailwind. Kind of everything we've talked about. Nothing has really been
pretty clear. It sounds like you're accelerating your
stand
focus.
out.
Can you
this is nothing though.
Maybe
just
provide us with a sense of what the process
I wouldn't even care
is
about this move we're seeing in
defining a product. Is it more
the real move
and
happens tomorrow morning unless we get something that's actually material.
When the payout when you start to see the payout,
Tesla did beat earnings expectations. Yes.
What should we expect on the OpEx front?
EPS and top line revenue, and auto gross margins. But
spend on Dojo or
R&D of Dojo.
Yes.
Just
well,
it was weird how it came out.
Expenditures, so
we're gonna talk about it.
But I mean, I think we will be spending certainly north of $1 billion over the next year on close to
north of $1 billion.
Well over $1 billion in Dojo. Jeez. Yeah. So
that's a lot.
I mean, we've got a truly staggering amount of video data to do training on. And this is another thing. In order to copy us, you'd also need to spend billions of dollars on training compute. I mean, it's like, and it's also hard to. You need the data and you need the training computer. It's like, think of all the things needed to actually achieve this at scale for a generalized solution for autonomy.
Say something to stop the sell-off.
This is one of the hardest problems.
I know.
You see a lot of AI companies doing, LLMs and whatnot. And I'm saying, if they're so great, why can't they make a software driving car? Because it's harder. That's why. But I do think that's I think there's some great AI companies out there, but just fundamentally the staggering amount of data we've got to process has got to be processed somehow, and custom silicon is the best way to do that. So that's what Dojo is designed to do. Is
2.5%. We see that on a normal day. I really wouldn't be concerned with this at all.
It's not optimized for LLMs. It's optimized for video training.
We'll see what happens tomorrow morning.
With video training,
should have went to church this weekend. I know.
A much higher ratio of compute to memory bandwidth.
Elon said Tesla was gonna 5 to 10x.
LLMs tend to be memory bandwidth choked.
That's all I've heard so far.
So that's it. I mean, but like I said, we're using a lot of NVIDIA hardware, and we continue to we'll actually take NVIDIA hardware as fast as NVIDIA will deliver it to us. Tremendous respect for Jensen.
He's pumping NVIDIA right now.
They've done an incredible job. And frankly, I don't know.
NVIDIA's fallen on that.
GPUs, we might not need Dojo, but they can't. So
strange.
They got so many customers. They've been kind enough to, nonetheless prioritize some of our.
Yeah, this is a buy the dip moment, for sure.
Yeah, the sheer magnitude of video training. Because, like
if this was going to be bad, Tesla would be down 10% right now.
10 times better than human, maybe 100 times
not.
better than human.
That's where I would
right
be
now, I believe there's something on the
a little more
million
concerned.
automotive deaths per year. And then if you
and it'll probably rally after the call into that
probably closer to 10 million
8 p.m. after hours close, and then probably overnight trading recover even more.
So it matters if you're you're twice as good as human, 10 times like 10 times better than human would still mean 100,000 deaths.
The tip with blood.
And a million severe permanent injuries. So it's like, okay, well, we'd rather be 100 times better. So there's really, it's a march of nines, and we want to achieve as perfect safety as possible. And it's vast, truly mind-boggling amounts of video and computer needed for that. So, and then I do think there's other applications for Dojo, but we just desperately need it for video training.
Great. Just to add to what Elon mentioned, so the numbers that he mentioned are between R&D spend and capital spend, and this is moving quickly, and so we provide a 3-year outlook on our capital expense. We are considering these expenses in that outlook, and as that moves up and down, we'll continue to update our guidance in the Q.
Yeah, I want to say the fundamental rate limiter on the progress of full self-driving is training. That's if we had more training compute, we would get it done faster. So that's it.
And it's just difficult to predict how quickly we can execute on it.
Great, thank you. Just as a follow-up, I recognize, there's some incredible macro uncertainty right now, but you're sticking with your near-term, your volume target of 50% CAGR. As we just think about sort of in the year ahead, Cybertruck is going to be some contribution.
McDonald's is still.
There's going to be some help from further EV penetration growth.
You are selling off a little more, almost 3%.
Are you willing to sacrifice on pricing to keep that 50% volume CAGR intact? Or, are you thinking differently about margins versus your prior commentary of willing to sacrifice on margins to get more share?
It's not about getting more share. It's just that you can think of every car that we sell or produce that has a full autonomy capability as actually something that in the future may be worth as much as 5 times what it is today. Because average passenger vehicle is doing like maybe 10 hours of driving a week. If let's say it's 1.5 hours a day on average, that's 10 hours a week, ish. If you've got an autonomous, if that vehicle is able to operate autonomously and be used in some either dedicated autonomous or partially autonomous, like Airbnb, maybe sometimes you allow your car to be used by others. Sometimes you want to use it exclusively, just like Airbnb, doing Airbnb with a room in your house. The value is just tremendous.
3.5% now.
I think it would be. I think it does make sense to sacrifice margins in favor of making more vehicles because we think in the not too distant future they will have a dramatic valuation increase. I think the Tesla fleet value increase at the point at which we can upload full self-driving and it's approved by regulators will be the single biggest step change in asset value maybe in history.
Thank you. Let's go to the next analyst. The question comes from Emmanuel Rosner.
So he said
from Deutsche
screw
Bank.
margins because FSD is going to be
Thank you
so
very much.
profitable that it's not going to matter.
First, following up on the autonomy. So, before you start launching these dedicated robotaxi vehicles on existing vehicles, you're improving FSD
Martin,
incrementally.
That's
what is
exactly
your latest targeted timing
what I'm thinking.
to essentially release a non-beta version
Somebody take
or
the
an
mic
eyes-off
away.
version that would trigger much higher take rates?
People just wanted to
would
hear
Tesla
margins will
benefit
get
from
better
lowering
throughout the
price
rest of this year, and we
of
just
FSD?
haven't heard that yet.
Well, obviously, as people have sort of made fun of me, and perhaps, quite fairly have made fun of me, my predictions about achieving full self-driving have been optimistic in the past. The reason they've been optimistic is what it tends to look like is we'll make rapid progress with the new version of FSD, but then it will curve over logarithmically. So at first, like logarithmic curve looks like just sort of fairly straight upward line, diagonally up. And so if you extrapolate that, then you have a great thing. But then, because it's actually logarithmic, it curves over, and then there've been a series of stacked logarithmic curves. Now, I know I'm the boy who cried FSD, but I think we'll be better than human by the end of this year.
About 10 minutes, I believe it'll end.
By regulators, and I'm saying that would be in the U.S. Because we got to focus on one market first. But I think we'll be better than human by the end of this year. I've been wrong in the past. I may be wrong this time. And the price of FSD. So the weird thing is the price of FSD is actually very low. It's not high. When you go back to what I was saying earlier, if the value of the car increases dramatically if it is actually autonomous. $15,000 is actually a low price, not a high price.
Come on.
Now we will offer, and I think we do sort of offer
Sports Institute. I really wouldn't even stress about it. I mean,
although most people don't know that.
There's low liquidity here in after hours.
Subscription, so you don't have to go with.
The stock is falling, but it's not a huge deal in the grand scope of it. I don't think.
Yeah, obviously if the car is worth several times, it's
we really haven't heard anything. Elon's just trying to justify that full self-driving is cheap, and that they could.
Thank you.
And should.
The next question comes from William Stein from Truist.
Not focus on margins,
William,
essentially.
Great. Thank you very much for taking my question. I'd like to ask about to stick on this AI topic.
I think it's just pulling back because low liquidity, and we really haven't gotten any guidance.
In Dojo today, you've spoken about FSD.
The forward-looking statements that we got just hasn't really produced anything.
And for investors that think that there might be quite a bit of value.
I don't think this really matters at all, though.
Features and products
in the grand scope of
Tesla. It might be concerning to see you pursuing another endeavor where AI is the focus. So can you talk about how
this is where we were
AI might overlap,
July 14th, so like 5 days
with
ago.
Tesla, or
this
in
move
other
really
ways,
is
perhaps
nothing.
It enhances the value of what Tesla does. Thanks very much.
Yeah, I think it will actually enhance the value of Tesla. There really were just some of the world's best AI engineers and scientists that were willing to join a startup. But
shorts are definitely trying to do what they can do here. They're sitting on massive losses.
So, I mean, that's actually how it got started. I was interviewing a few people, and
that's definitely a factor as well.
I was like, and that's
just low volume.
I mean, I can convince them to join Tesla.
5 to 10 times lower than what you get in any normal minute when the markets are open.
Startup that I run than they go work somewhere else. That's kind of the genesis of XAI. And XAI is focused on sort of
Analyst
AGI,
comments will start coming out tonight, and a lot of them in the morning. Market open is going to be where the real action is. Yeah, Netflix is down 8. Like,
brings to Tesla.
This isn't even a problem. I mean,
also for some of the best, for the very best people in the world, they really just want to work on interesting problems. So if you take, say, our material science group, really what convinced Charlie
Apple's down 0.5% in after hours. I mean,
well compensated.
The markets are not really too happy right now.
And both,
Meta's down 1.5. Jeez.
Where we think
it is bloody out here on Wall Street in after hours.
He got to work at both Tesla and SpaceX. He
S&P down 1/4.
Leave Apple if it was just Tesla.
Nasdaq rebalancing is coming too, so that could be having an effect on
that's the kind of
Tesla.
Thing, you need to do, and that actually has been very beneficial to Tesla. So.
If I could squeeze one more
still, I wouldn't be concerned about what we're seeing right now.
I wonder
we're bouncing.
If you think you can hit
just like that
the 1.8 million unit number with current pricing,
yeah.
or you anticipate
this is important.
Continue to lower prices, because it seems like they've stabilized. The trends have stabilized in the last maybe a month and a half. Should we expect a sort of continued decreases, or
can we hit 1.8 million deliveries without price cuts? Is the question.
Sure. We have sort of restarted the referral program, which I think will be quite effective. But, as Zach was saying earlier, we don't control the macroeconomic conditions. So if interest rates continue to rise, that reduces the affordability.
You better not hit us with the same shit again.
And for a lot of people, they're really trying to balance, just barely breaking even every month. In fact, if you look at the rise in credit card debt, they are in fact not breaking even every month. Like credit card debt is looking scary. So we just don't control macro conditions. If macro conditions are stable, I think prices will be stable. And if they're not stable, then we would have to lower prices.
Jeez.
Thank you.
I feel like that's a respectable answer, though. Elon's just not giving it to us.
As you're building out Dojo and implementing what truly is going to be a highly complex set of software, can you speak to the maturity of the operating system and how much outsourced
earnings for Tesla and Netflix were actually phenomenal. I mean, Netflix has their own problems going
this
on,
is a custom software
Tesla and Netflix, just overall numbers were good.
But it is designed
relative, I mean, to expectations.
At a high level, PyTorch and Jack.
Like a lot of people thought Tesla would have negative free cash flow.
But then
Elon even said he's like it's crazy that we don't have negative free cash flow, considering all of the expanding they're doing.
And that Tesla software.
And it was 1.01 billion in free cash flow. That's pretty good. That's actually really good.
Okay, thanks so much. That's super helpful. And then can you speak to how you're managing some of the geopolitical risks relative to your capacity expansion? Obviously, as you guys continue to grow at this rate, you're going to be putting some folks out of business. And
you're going to be putting some folks out of business.
Regional economies. So just want to understand how you're thinking about that in terms of some of your CapEx plans and how you're managing some of those relationships with different countries and regions.
He said you're going to put some people out of business.
Well, this is a period of unusual geopolitical risk. So I think the best we can do is, have factories in many parts of the world, such that if things get difficult in one part of the world, we can still keep things going in the rest of the world.
Thank you. The next question comes from Mark Delaney from Goldman Sachs.
Thank you very much for taking the question. Tesla has been making progress reducing cost and did so again last quarter. Can you give an update on when you think automotive COGS per vehicle could be under the historical $36,000 per vehicle level, and what are the key puts and takes to get there?
Give us something
I think I've asked this
juicy.
in the past. This is very difficult to forecast. There's a series of costs that we manage. There's a series of costs in which we don't control. And so, particularly on the commodity side, where labor costs go, et cetera, it's just hard to say.
Yeah, we saw very inflationary pressures, like strong inflationary pressures for a while last year, and now which obviously makes it very difficult to reduce costs. And now we're seeing
the markets are getting slapped.
Deflationary pressures, certainly
just overall right now.
If deflation is a pressure, but we're seeing commodity prices dropping as was mentioned. As Karin mentioned a moment ago, and I think
Netflix down 9%.
The trend seems to be deflationary at the commodity level.
Definitely. There's that, and then there's also the unit economics improve as volumes grow. That's the other thing we're seeing. As we're becoming a bigger and bigger part of a lot of suppliers, economies of scale come into play. There's equipment depreciation that comes into play, equipment that was commissioned 5 to 7 years ago.
Below 250.
That used to be a part of the piece price.
There's no way. Definitely not tomorrow. I mean, we're 279 though.
Contribution
you broke under 280.
And then just we continue
which
to
again,
have this
I'm not.
mentality of continuous improvement.
Take this with a grain of salt.
Reducing labor, improving automation. And just continue to get better at what we do. So we have seen, I think every quarter we have seen an improvement. Of course, the commodities spiked up and down, but just in general, the trend is towards being more efficient.
Yeah, totally agree.
Yeah, lithium prices went absolutely insane there for a while.
Yeah, and they're recovering now.
Cobalt's like a third of what it used to be.
Yeah, and we're still early in the ramps. Well, not early in the ramp, but early in the cost down curve of Austin and Berlin.
Yeah.
And so it takes time to work the cost out. At first, it's a focus on ramp. Ramp brings cost down.
Ramp quality, and then ramp quality cost.
Yeah, and then once that stabilizes, we can divert bandwidth to cost reduction. And so Austin and Berlin saw quite a decent amount of cost reduction on a fundamental basis from Q1 to Q2. We'll continue to do that work. That will be helpful. And so we're just going to keep chipping away at it.
Yeah, packaging is a big element to that.
Yeah, I think rest in peace Netflix is the real story here.
Normalizing, which is great.
Qbot utilization, something that the team has been very focused on. So every bit of it.
Yeah,
it's hard.
Logistics is underappreciated. Yeah, so
this has happened before. Yeah,
happens
almost too much.
Logistics.
Yeah, and we made tremendous improvements in cost in all fronts. On extract costs, we have down to pre-pandemic extract cost levels now, and our goal is to go further down.
So when we look at our progress from Q1 to Q2 on cost, the way that we look at internally, normalized for the impacts of mix shift with Austin and Berlin being a higher percentage of our mix, normalized for SNX being a higher percentage of our mix in Q2 versus Q1. The sequential cost reduction, it might be the largest we've had in a while. So I think it's great work on behalf of the Tesla team, and we just got to keep it up.
Yeah, it's a game of pennies. It's like Game of Thrones with pennies.
Game of Thrones. Dude.
Mark, do you have a follow-up question?
Come on.
I think you're muted.
Yep. Yeah. Thank you very much for all the details on that. Maybe you could put a finer point on the downtime impact that you spoke about in your prepared comments, in terms of production impact, and then also to what extent there's a margin impact from those factory upgrades that you're planning this quarter. Thank you.
Yeah, the downtime, we don't know exactly the number of cars impacted because, kind of the way that we go into downtime windows for upgrades is, we set aside a period of time, but then the team is challenged to go as quickly as possible so that we can get the factories up and running again and minimize that. So it's not
Gabriel,
reduction,
that's true.
Hopefully it's quite small.
There's not a lot of allocation.
I mean, we're asking for level of precision that is not possible
big
to
money.
Answer. So let's move on.
Yeah. I think this is unfortunately all the time we have for today.
Yeah.
Okay. So
no, it did.
We'll speak to you
definitely
all
did, but
the next few
nobody's
months.
really covered. You have
much.
seen options go into the money, so it'll be interesting how the rest of this week plays out. It is possible that tomorrow and Friday could get pretty crazy. But I mean, overall, I believe that's the end of it. You just really didn't get anything that was, I guess, forward guidance, more or less. It was a lot of what we already knew. I mean, a couple of times Elon tried to justify price cuts, and that was kind of the same thing last quarter, and we got incremental price cuts, nothing too crazy. Yeah, and now, I mean, Elon stopped talking, and we are popping a little bit, but I really don't think this matters in the grand scope of things. Tomorrow morning, you're going to get a bigger actual reaction, although the markets are kind of selling off. Netflix down almost 9% is definitely not going to help anything as far as Tesla is concerned, but this is not bad. And we've seen this happen so many times in the past. It just happens like this with Tesla most of the time. You sell off right after earnings, and then the next following days you rally. Now, there's a lot of there's obviously a lot of shorting, right? There's 28 billion worth of short positions on Tesla. This is the highest amount of shares sold short in 2 years. This is not the big win that I think a lot of the bears were hoping for. And really the only bearish thing that you could even pull out of this, like, it's not auto gross margins, it's not revenue, it's not demand, although Elon said whatever demand looks like is kind of how we're going to go about prices. So he didn't rule out any further price cuts, nor did he confirm it. I mean, the most bearish thing you can actually say about Tesla's earnings and the earnings call is we just did not get any form of guidance. Like, literally no form of guidance was given. And that kind of just shows the unclear market environment that we are in right now. There's not enough clarity to give us guidance. That's kind of bearish, right? That's not great. But as far as the home run the Bears were hoping for, that just did not happen. So odds are what I would expect to happen is, obviously depending on the markets, right? Again, Netflix is down 9%. It's not a rosy picture out there. Nasdaq's down 0.65% after hours. Apple's down 0.5%. Microsoft's down 0.5%. S&P down 0.25%. It's not terrible, but it's not great at the same time. So tomorrow morning, we've seen this happen over and over again with Tesla. You sell off during their earnings call. Elon says something everyone hates. And then the next day, what happens? The stock recovers in pre-market. And then in the first hour or so of trading, you guys got to remember that this volume that we've seen today here in after hours is like nothing compared to what you see in any normal minute throughout the entire trading day, right? Any normal minute of the trading day, you're seeing 200 to a million shares, 200,000 to a million shares trading hands. I mean, what you've seen here in after hours, even on the sell-off that you're seeing, it's what last minute was 17,000 for volume, 16,000, 24,000, 18,000. Like, this is nothing as far as volume is concerned. So you can get price movements based on this, low volume in after hours, because it's all based on supply and demand. That's why you can get a low volume rally, in which that's what we've seen with Tesla just recently, right? The volume dropped, but Tesla stock continued higher. Like, look at the volume candles. The highest volume that we were seeing was like 210 million back here on June 21st. You fell all the way to 92 million shares that traded hands back here on July 11th. Half of the volume, but Tesla continued to go higher. That's because it's all on supply and demand. If there's more people that are willing to buy the stock at a higher price, right, and just continue to hit that bid higher and higher, the price of the stock goes higher. If there's more people trying to sell the stock at a cheaper price, the price of the stock goes lower. So hedge funds, market makers, institutional investors, retail investors. When you're trading in after hours like we're seeing right now, it doesn't take a lot of money to move the stock. But then again, the next day you tend to see that actual movement, right? So yeah, I think that is important to point out. Can we hit 290 tomorrow? Yeah, I don't really think anything is a foregone conclusion at this point. There was more good than there was bad. Again, the only kind of bad thing that I am pulling out of this that I can see is Elon and the executives really don't have a clear guidance, right? They don't know how things are going to be. Although we did get official guidance that kind of came out with the report that said they still expect 50% delivery growth, annualized. But we didn't get any near-term guidance. We didn't get any 2023 guidance, and really those margins. Now, we didn't get the guidance, so what's going to happen is analysts are going to start coming up with their own guidance, much the same way as Apple or Netflix, that doesn't give you solid like subscriber numbers, or Apple that stopped giving guidance in COVID alone. Analysts kind of gather their guidance throughout the quarter, so things can kind of move up and down, and you really have analysts that kind of dictate what the guidance is going to be. And again, I don't think this market that we're seeing in after hours is a good one right now, obviously, for helping Tesla actually get a bounce. But nothing was really said, so I expect tomorrow you probably do get a bounce up, because you're already down 5.5%. So you're going to go, or 4.5%. You're already going to go into tomorrow down 4.5%. And we beat on everything. I mean, besides auto gross margins, but nobody was expecting 18.6% or 18.8%. Nobody was expecting that. That was BS numbers, right? That just wasn't expectations. Even the bulls were expecting 17.5% margins. It was a great quarter overall. So, yeah, that's kind of what I'm thinking about here. That's kind of what I'm looking at. We don't have any more economic data. We don't have anything else too, I guess, crazy coming out throughout the rest of this week. You do have some earnings, your credit card companies, but nothing that was as big as Tesla or Netflix. Next week is obviously going to be the bigger one. Where you're going to get your Googles, your Amazons, your other trillion-dollar companies, Microsoft, and that'll obviously give you another move. But we see this time and time and again. You sell off during the earnings call, and then the next day is where you get the real action. So, yeah, that's kind of my thoughts on it. Gonna kind of put together a video here on my expectations for tomorrow and really the next couple of days and weeks. So be on the lookout for that one, guys. I'm going to go ahead and wrap it up here. Yeah. Thank you. Thank you for tuning in. Thank you for watching with me. You guys have a great night. And let's go, baby. Let's go, baby.